Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, June 20th at about 1:30 p.m. Eastern. Well, the S&P 500 has rebounded sharply from its early April sell-off as tariff-related tensions have eased. However, the U.S. benchmark appears to be taking a breather at about 2.7% below its February closing high. The index has actually gone 27 trading sessions since coming within 5% of its February high, but has not yet set a new record. And yes, I think we've kept up with that. So on we go to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 Spider. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading right here at 500, right here, the red, little red candle you see at $594.73, or just under 6,000 on the S&P 500 itself, and we just mentioned that earlier. So it is trading a little more than 2% below back here its all-time closing high on February 19th at $612.93. So as we know back here, the SPY is just sitting atop its 20-day moving average. The 20-day is coming in here at $594.71, literally 2 cents below the current price of the SPY. Then we have the 200-day moving average down here. The black line is coming in at $579.87. We can call that about $580 if we want to. Also, then we've got the green line, the 50-day moving average coming in at $572.29. So we can call it 572. And we know that since these lows down here, the April 7th low at $481.80, the SPY has climbed all the way since then. It's climbed up about 24%. So anybody who made that run has nothing to argue about. Pretty darn good. We know that since this all-time closing high back here at $612.93, the SPY rolled over here, fell to this March 13th low at 550, rallied up and got hit on the head here. It shows you how strong moving averages can be by the 20-day and yes, the 200-day definitely moving average. Tried to get over 560 but couldn't, then fell hard like everybody did down to this April 7th low down here at $481.80. Then it bounced on April 9th, came back up here to 548, but could not keep going, pulled back to 508, then started a very nice rally up here, back over the 20-day, back over the 50-day, back over the 200-day. Went up to some highs here at around 590 and change, pulled back to 579, right around there with a 200-day moving average. Now, instead of a ceiling, the 200-day is acting as support, as a floor. And that's interesting how these moving averages can be treated by price. So then it rallied back up here and pulled back gradually to where we are now, again at about $595. We can round it off to. When we stepped back and looked at this pattern in the past few weeks, we've said, wow, this is it can be called here. It could be called a very dramatic cup with a handle, a very dramatic cup with a handle, much more dramatic than they usually are. This is a pretty bullish pattern for sure. It's a dramatic one. So it is bullish. And when price moved up over, when the SPY moved over the 200-day moving average here, I thought, wow, okay, if it does that, we're in a bullish mode here. We're in a bullish mood. So that looks good. However, I know from experience in the last 25 years or so that when we see a dip like this from a bullish market, from a bull market, when we see a dip like this, price can rally back up, but then it generally goes to almost to prior highs. You can see 612 back here. and then, pretty much right there. It rallies back up, but then buyers who owned it back here say, gosh, the last time the SPY was at 600, 612, I lost money, it fell all the way down. So you do get some sellers coming in here, a little bit of resistance, and knowing that price has been there before, is it going to go again? And of course, we have a lot going on in this world right now, but it's totally natural for price to take a breather in a pattern like this. Now, we can say we have potential support here at the 20-day. It's just 2 cents away from where price is now. Then we look down here to the 200-day, which I'm definitely going to be watching. So let's call that 579, 580. That could be definitely support here. And then we have, again, the 50-day moving average at 572. And then just a little further down, see this gap here has never been filled. Interesting. So the gap comes down to about 568, 570. So there's pretty much good support here. I think this is 550 right here, and we have a pivot there. So the 550 on down to 508 and so forth. So a lot of potential support should the spider need it. And then, of course, resistance is up back at 595 and back at these highs back here at 612. So I'll be curious to see what goes on next week, especially, again, with the events we have going on in the world. I might shrink back a little bit here and get a little more conservative and get into a wait-and-see mode. So we'll talk about that in a minute. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the exchange-traded fund which follows the NASDAQ 100 index, and that is the top 100 non-financial stocks in the NASDAQ stock market, including the Magnificent Seven, all those big momentum stocks. So today when I captured this chart, the Qs was trading at $527.23. Again, also about 2% below the all-time closing high back here in February 19th at 539.52. So the Qs is sitting here just like the SPY on top of its 20-day moving average. The 20-day here is coming in at $525 and change. The 200-day moving average, the black line's coming in here at $499 and change. And the 50-day, the green line, which looks like it wants to cross over the 200, which would be bullish if that could happen, get it back in order. So with the 50-day down here at $498.30. So if the Qs can keep going sideways or up just a little, we should get that crossover sometime, in the next week or two, which is a bullish signal. Now, we do know that from the April 7th low here at 402, back up again to where we are now at 527.28. It has also been, just like the SPYs, it's been a 24% run up, and whoever got smart and got in there, or any part of this, certainly has no room to complain. Now, since the Qs made this all-time closing high back here in February at $539.52, just like the SPY, it rolled over and made this March 13th low at 466, then rallied back up to the 200-day moving average at 494, then fell down all the way down on April 7th to this low at $402.39, just call it 402. It then rallied like everybody else on April 9th up to the 20-day. To 468, pulled back to 428 right here, then climbed up here to this May 19th high at 522, then pulled back here to 505, headed for the 20-day, but didn't stay, rallied back up, and to the highs at 539, 540, and then to where we are now at $527. So like the SPY, we have potential support here from the 20-day moving average, although we're cutting that one pretty close at 520, at 525. Price is 527. The 20 days at 525. So we're cutting that a little close. We also have more support at the 50-day moving at 5. We could say here at 505 there is a pivot there. We could say that's potential support, and of course there is a gap to fill here as well. And then our next support lines come up to where the 250-day moving average come together. Call it 499 or 500 right there to round it off. And then we come down here to about 466 potential support and on down. So again, just like the SPY, maybe I'm wrong. Who knows? I'd like to be wrong. Maybe it rallies right back up and heads right back up to these February highs in the coming weeks. Who knows? I'm just going to kind of partly stand on the sidelines in the coming week because it's a pretty confusing, should we say, time out there in the world, and I just want to protect my profits. So and it would be totally natural here for the SPY and the Qs to roll sideways here for even a next month or so. It would be totally natural, even if nothing else were going on, for them to kind of move sideways here and catch their breath. So as always, trade carefully and please keep an eye on your protective stops. For our final chart today, we're going to look at a daily chart of the Invesco Food and Beverage ETF, the PBJ. It has 30 holdings. The top holdings include Monster Beverage, DoorDash, the Kroger Company, Coca-Cola, and Cisco Corporation. Now, when I captured this chart today, the PBJ was trading at $47. Right here, you can see $47.46. Now, it did make, look back here on the left with me, it did make all-time highs back here in December of 2024 at about $49. Then it rolled over and fell to 45 in January. Then rallied up to 48 up here pretty stiffly, pretty nicely. Then fell down here all the way to the March low, down here at 44. Then rallied and rallied back up here again to about 46, up to the 200-day. Then fell back down on April 7th to a low of $42.57. Then back up to 48. And back up to almost not to 48 quite, but back up to 46.50. I'm sorry, down here, back up, pulled up here, then kind of walked up the 20-day moving average and continued to do so. Pulled back a few times, pulled back to the 50 and 200-day moving average. And again, in this case, the 50-day is looking like it wants to cross over the 200-day. And today broke to the upside. And one reason I give you the name of 5 of the top stocks in the ETFs is because you may want to look at them individually. I know Kroger had a really good day today, and of course it is one of the top holdings of the PBJ, so you may want to look at some of those separately. At any rate, I again, because there is some turbulence in the world right now, or some questions to be answered, I kind of like during times like this to go to a quieter place. So that's why I'm looking at the food and beverage ETF. So I like this pattern here, at least the current pattern of it coming back up very dramatically, back up to its 200-day and staying above it for a while, dipping last week and then starting up again now. So it's not a high-risk trade, at least if conducted properly. So since it's sitting on the 20 and 200-day moving average and it's heading up for the 20-day, in the coming week, if the PBJ can stay above these moving averages, so call it that makes you feel better, call it $47. If it can stay above $47, and if the market is behaving reasonably well, I will buy a small position in my trading portfolio of the PBJ, and I'm going to have my stop in down here. I'll give it a little room at $45.90. Okay. If and when the PBJ can close above these all-time highs back here from December, if and when it can close above 49, I will add to my position, and my stop will definitely be a trailing stop. So you may want to keep an eye on the PBJ in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my training program right here, this one, Trade the Trend to Profits, you'll learn when to buy, how to easily manage your trades, and then know exactly when to take profits. And you'll make bigger profits while spending less time researching and monitoring your trades. I like that part. Our new low price for this program is only $127. And by the way, some of the trainings listed here are only $59. When you order, you're going to receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts. I love it. For free, those are the charts I use. And once you purchase, you'll have unlimited access to learn at your own pace. So from our ever-popular flagship product, 7 Steps to Successful Trading, to how to swing trade successfully, how to trade the trend to profits, how to read charts in absolute, 3 winning setups, good for all short-term traders, and how to bottom fish like a pro. Discover how my online programs can help you earn more money quickly and easily. So check them out now by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.